Nature is beautiful and amazing, and so is our vast, vast universe. And all of these starts from the nature's very smallest element, which is the atom, to the most advanced and the most unique, eye-catching patterns in the universe, which is the celestial bodies. Everything seems to move in a pattern, isn't it? And that's because everything is in a proportion. Nature relies on this innate proportion to maintain its balance. The financial markets too seems to confront to this proportion, and that's what we call as the golden ratio. But is it for real? Or is it just a wishful thinking for all those who are in the market? Does it really work? Or is it just a coincidence? Can you implement it for guaranteed results?
Too many questions. Too many questions, Raj. Go home, enjoy your success. Chill out.
Well, we'll see and try to answer all of these in this video. My God, this video is going to be very, very interesting. So like this video right away and subscribe to this channel so this video can reach a lot of people. If you've been in the market, spent some time trading, you have probably run into something called as the golden mean. Now we all know in technical analysis, when you read the graphs, the support and the resistance levels are the main points. And here comes the golden ratio, and this is derived from the Fibonacci numbers. Nature too seems to use this to maintain balance. The same beauty you see in a spiral formation in the solar system. In our nature's beautiful flowers, you see the pattern in the architecture, you see them in sculptures, you can see them in snail shells, in our very own DNA molecular structures as well. Natural phenomenon like the hurricane, the bee count in a beehive. Unbelievable, isn't it? But very, very true. The golden mean became very significant because it illustrates balance in the nature, the art, or even human bodies. It was the epitome of balance, the perfect shape, the most pleasing vision. This doesn't spare the financial markets as well. So patterns in numbers. Fibonacci claimed that the consistent pattern could be found in what appeared to be in random numbers. But this beautiful sequence is not all that important. The essential part is, as the numbers get larger, the quotient between each successive pair of Fibonacci number approximates to 1.618 or its inverse, 0.618. And this is exactly how you calculate the golden ratio, by this formula. See, some traders, they use this ratio derived from the Fibonacci numbers to define their key support and resistance levels. They often believe that such estimates are very, very natural. Why? Because they are based on the Fibonacci sequence. A similar theory was proposed by R.N. Elliott, known as the Elliott wave theory. The logic behind this theory is that price movement of a stock can be predicted by the historical price movements. The wave pattern that is derived by the investor sentiments. According to this theory, it does not depend on what time frame you are actually analyzing the market. Market movements just follow the same kind of pattern. It claims that crowd behavior, mass behavior makes a pattern in the market. It creates a trend. It gives us a trend that we see in the market. It gives a wave-like pattern. And this is a physical manifestation of the mass psychology of this world. These patterns, they not only appear in the stock market, they are not limited in the market, but they appear anywhere in this world where people take a decision in masses. When people take mass decisions. To give an example, housing prices, fashion trends, how people choose to travel or commute. But you may ask, pattern in investing, is it pristine? Do they naturally occur, or is it just a wishful thinking? Well, nature may look very beautiful. Flowers might blossom and give us a pleasant smell. Life is the most beautiful gift given to us by God. And all of these, they all run in a sync and form a balance on this earth. Everything is in a sync except one, and that is human behavior. Human behavior cannot be trusted. It doesn't have a consistency. It doesn't have a pattern. It is mischievously naughty. It is cluttered and unpredictable. Any possibility of any pattern or consistency is very, very rare. And it's almost non-existent in human behavior. And what is trading? It is human behavior. Trading is not a natural phenomenon. It is something which is made up by humans. And hence, it is not perfect. So if you are to succeed in trading, you have to accept that human behavior is unpredictable, and yet look for patterns in a place where it is least available. You have to accept the uncertainty of human behavior and still look for consistency. It's almost just like searching for a good food in a garbage can. But on the other hand, many traders find this Fibonacci sequence fascinating. What they find fascinating is they find the principles behind the human behavior and human nature, and they believe that these things would repeat once again. They believe that human would behave in a similar pattern again in future. Yes, it does. It sometimes does fall in place, but that's it. Sometimes. And when sometimes it does fall in place, it is because of the similar behavioral pattern. But can you take it for granted? No, never. You cannot guarantee a human being would behave in a similar manner again in future, every time. Although it does happen sometime, but there is no guarantee that it will happen every time. Sometimes when you're superstitious about your beliefs, some traders, they do believe in superstitious aspects of trading. They don't have confidence in themselves. So they start looking for patterns, they start looking for laws of the nature that can support their logic. And this is where these things come into picture. The beauty, the proportion, the golden ratio, the balance. This gives these traders a false sense of confidence, which they want to utilize in their trade and make profits. They seem to believe and correlate the fact that if everything from small atoms to heavenly bodies, if everything falls under the purview of the golden ratio, trading too would. But unfortunately, trading, which is predominantly controlled by human behavior, is out of this purview because human behavior cannot be predicted, and hence it cannot fall in a pattern. It may not fall in a pattern. You cannot have the luxury of believing the effect of external forces, the planets aligning themselves in your favor of making a trade. That is not possible. If you want to be a profitable trader, the surest way is to build up your trading skills. With experience, with a solid trading skills, with rock solid confidence, you will find you can finally start accepting the uncertainty of the market. And you can then start depending on what you have learned and experienced and make profitable trades. So this and the list of videos here in this playlist will help you tackle the market while you're trading. Go ahead and have a look at it right now. As of this video, adios.